significant cryptocurrency trades that I've personally made in the past and how they impacted my life. I haven't done that in a while. I talked about it in a podcast years ago, and there have been more since then. So I was taking notes to prepare for this, and there were five-ish in particular that I thought I'd talk about. And I think this is also kind of fun because if we happen to looking at the price. So as you may be aware, Bitcoin is very, very close right now to its all-time highs. As I'm speaking, it's almost at $107,000 USD. I found varying prices reported on different graphs regarding like what its all-time high is. It looks like it's around 109,000, although I swear I remembered it being more like 105 something. We'll say it's 109,000. So it's creeping up. We can see that it's been creeping up. If we look at like the max price, I mean, this graph makes it look like it's already broken through its all-time highs. So kind of looking back at what's happened with trades and things that I learned when making those trades that taught me certain lessons about trading cryptocurrency in general. So let's look at this history chart. I found this. Let's actually move my face so that I'm not blocking the bulk of the chart. Put me over here. Yeah, so if we check this out, Bitcoin price history since 2009, it first started to exist January 3rd. It was mining commenced. The Genesis block was mined on January 3rd of 2009. The white paper describing how the system would work was published in 2008. In the cusp of everything that was going on with the Great Recession, or leading into the Great Recession, I suppose, as the stock markets were crashing. That's when the Bitcoin white paper was written and published to forums, asking for peer review, for feedback from other people who were working in cryptography who are interested in new solutions to build new economic systems. So this is fun to look at because it takes us back there. It's kind of hard to find historical price data for some reason on the internet, and centralized platforms like Gemini, for example, which is terrible. Don't use Gemini. They did very bad things to me. They stole a lot of money from me, and I'm continuing to fight a battle against them regarding that. But for example, on their centralized platform, you can only see price data for a specific cryptocurrency up through like the preceding 12 months, which is really dumb. I'm not sure why they do that. I can't imagine that it takes that much additional like data storage to like, it just seems like that would be beneficial to them to show that, because with so many cryptocurrencies, it's just going to show stuff going up like super high. So I would assume that you would want people trading cryptocurrencies to be aware of how much it's gone up as they're trading it. But I was able to find this. So if we go back here, it takes us back to October 12th of 2009. The price is $0 then. So yeah, tracking here, this is going through a couple of years. We're starting to see a little bit of a price by February of 2010. And as you may be aware, something that has kind of bookmarked various cryptocurrency market cycles through the life of cryptocurrency as a sector is an event called the Bitcoin halving. There have been 4 Bitcoin halvings to date. The first one, as I recall, was in November. I can't remember the specific date, but it was November of 2012. And the halving is significant because it's integral to Bitcoin's deflationary design. Miners who are securing the system and recording transactions on Bitcoin's blockchain, it's a mutable ledger. Those miners are issued rewards every time a block is mined. And with the halving event, with each halving event, which happens roughly every 4 years, it's after 210,000 blocks have been mined, the halving event cuts those rewards to miners in half. So that significantly decreases the supply of Bitcoin being generated at a given time. And like traditional market forces tell us that when there is a decreased supply, that can increase demand. And that's totally what happened with Bitcoin, and it drove up the price. Other cryptocurrencies are not necessarily deflationary, by the way. Ethereum wasn't until very recently, and I'm not certain. I'd have to look to see what like the most recent updates had done. They just had an upgrade on May 5th, I believe, called Pectra. That's their most recent upgrade. But they made changes so that Ethereum became more deflationary as well. But there's complexity there that I don't feel that I can speak on confidently here without like making sure I'm up to date on what's going on. But Bitcoin out the gate was always intended to and designed to be deflationary. So those halving events kind of really kick things off in terms of market cycles. And if we look at this here, okay, so we know that November 2012 was the first halving. So here it says the price was like $11.94 USD. And then it's funny because like, you know, you can barely see it on this graph because it's gone up so much. But what I recall being a huge deal in 2013 was that the price in April of 2013, let's see if I can even see it on here. This has the price breaking $100 in April. That's the thing about these graphs though too, because I'm near certain, I'm like 99.5% certain that Bitcoin hit $263 a coin in April of 2013, which were then its all-time highs. And I don't know how this graph is tracking the data or where it's bringing in the data from. I mean, this is maybe like a daily like print at a certain time of day, so it's not necessarily tracking the highs for that day. I don't know, but I remember that it hit that price back then and it was a huge deal. People were freaking out. And as I've shared before, if you've listened to me talk about my experience with Bitcoin a little bit, it was really interesting to me because there were people from various areas of my life who did not know each other, who were like totally from separate areas of my life, who were all talking to me about Bitcoin at the same time. The one I remember best was an economics professor I'd had in undergrad, who then I like later had contact with because I made a film about microlending to women and she was sort of involved. She got some students involved in helping with the film. So she was talking about it, which was interesting. So I remember consciously thinking in a way that's only happened a handful of times in my life, not even a handful probably. I remember consciously thinking the universe or whatever is telling me to pay attention to Bitcoin, so I should pay attention to it. So I did. And then coming into later that year, as I've shared about before as well, Silk Road was shut down. Silk Road was like the illicit platform, or the platform allowed you to engage in all kinds of different illicit activity and you would pay in Bitcoin because Bitcoin transactions were anonymized. At that time, like KYC, know your customer, wasn't a thing because traditional financial like regulatory mechanisms hadn't really intersected with cryptocurrency so much at that time. So Silk Road was shut down and the founder went to jail. He's my age. He got a life sentence. Let's look him up. He was just pardoned like right after Trump took office. That's the dude. And I remember reading, I feel weird like looking at his pictures, like there's some dark energy there. So I'm gonna close that. But I remember reading, I mean, it was just very recently after he was pardoned, somebody, I think it was a tweet, somebody was talking about how like there were these various wallets that were probably dust wallets. So wallets that he transacted in back in the day, 2013-ish, before he went to jail. I think he was convicted in 2015, but he was in jail for a while before then. And there were dust wallets, so there were these wallets that he'd used, but there was such a small amount of Bitcoin still in them at that time that it wasn't even enough to cover transaction fees. So I have a bunch of dust wallets too in various cryptocurrencies from over the years. And since he had gotten pardoned, those dust wallets now held Bitcoin that was worth like almost 50 million US dollars. I think it's problematic that this guy was let out of jail, frankly. But it happened, and it's part of the narrative surrounding cryptocurrency. And back in 2013, when Silk Road was shut down, the Fed seized $30 million worth of 2013 Bitcoin, which was later sold, by the way, to this dude, Tim Draper. Let's see if I can find an article about it. Yeah, it was in an auction. This says it was worth $18 million. I remember it being worth about 30 at least. Well, if he won it in 2014, yeah, the price would have gone down. Anyway, this dude's son and his father are both investors in Seeds. His son had a startup accelerator that was Bitcoin focused years ago that Seeds went through. He's I don't know, he's just a dude. It's just kind of a little bit of a fun fact. So he got that Bitcoin and it's worth a lot more now. So when the price dropped, though, following that, because there was all this uncertainty surrounding what Bitcoin was doing and what it was, and like all of this, there wasn't, I hesitate to call it a mainstream narrative because so few people were even aware of what Bitcoin was at that time. But whatever the public narrative was surrounding Bitcoin then was that this is bad, this is gross, this is this money that's used for things like hiring hitmen or whatever, like stuff that is not above board. And that was what it became associated with at that time, and the price dropped a lot. From 263 at highs in April, as I recall, down to when I started buying it at about $90 a coin. So as you probably know, if you've paid attention to markets ever at all, whenever those moments of uncertainty present themselves, it's easy to understand this intellectually. It's much harder to do in practice. But whenever we see those moments where things have dropped because people are freaking out, but you know that you still believe in the asset in question, you believe in its fundamentals, you think it has more to do, those are the best times to buy, right? That's when the experienced traders are coming in and buying. And I was able to leverage my experience as a former stock trader at that point to start buying Bitcoin. But I wanted to share this in particular because I was so excited. Like, y'all, I remember I was living in Brooklyn at the time in Bushwick, and I guess I was an early-ish gentrifier to Bushwick. There was this coffee shop I used to go to a lot, Little Skips. And I was there and I was like, Coinbase, you could trade on Coinbase at that time. And I was buying Bitcoin in this coffee shop. And I remember like looking around, I was there by myself, and that I wasn't there with anyone I knew, but the coffee shop was full. And I was looking around and I was just thinking like, I'm so excited. Like, I wish I could talk to people here about how excited I am to be buying this now. Like, this is so fun. And like, you could talk to people on Reddit a little bit, but no one in my life was engaging with it. And I started telling everyone I knew, everyone who would listen, and most people I knew didn't really listen, but I tried. I was evangelizing it out of my own excitement, specifically because I was so excited about what its decentralized technology could do to transcend the discrimination, the misogyny, the dysfunction that I had seen when working in finance, when working as a pro Wall Street trader, and starting to realize how dumb that system was in many ways. That isn't to say that it didn't serve a function at a certain time in history, I guess, that benefited a relatively small group of people, but I think we've outgrown it. We've outgrown these manufactured zero-sum paradigms where you're out there thinking you have to fight and compete because the system, for no real reason, is designed to make it such that if you want $1, if you want to win $1, somebody else has to lose that dollar. It doesn't make sense because there's money everywhere. There's so much money in this world. It's being printed constantly. As I've said a bunch of times in the past, there's plenty of money for everybody. It's just that it's moving in weird ways and continues to for reasons that are not about the good of society, frankly, overall. So that was my first cryptocurrency trade. And I mean, Bitcoin was almost the only cryptocurrency around at that time, so naturally it would have been. But another cryptocurrency trade that I made at almost that same time was in the second cryptocurrency. I think there actually was another cryptocurrency called like Digibyte maybe, or something like that, but I didn't see it being traded then. I didn't see conversation around it. I never personally traded it. I think that's what it was called. Litecoin was spoken about as though it was like the silver to Bitcoin's gold. And Litecoin had just forked Bitcoin's blockchain and made some adjustments so that transactions, which took about 10 minutes on the Bitcoin blockchain, could happen more quickly. within the Litecoin ecosystem. Like that's the change that they made. So it was faster transactions. So it was this idea of improving upon Bitcoin. But Litecoin was newer and the price was lower, right? And something that I've noticed, we'll see if this holds up this market cycle because things are different now that so many institutional investors have bought into Bitcoin over the past couple years. But typically what we would see in past cycles is that cheaper cryptocurrencies would often outperform the more expensive cryptocurrencies percentage-wise. They would just have a lot more upside. And that was something that I saw back in the day in 2013, like making these trades. And I think I did, my machine shut down, but I did have a Litecoin graph to show you. Yeah, okay. You can see that, right? This says Litecoin. I can put myself back down here again. So this gives us some sense. This is the all-time graph for Litecoin. It goes back to, can I make that bigger? It doesn't look like I can. Okay, it goes back to 4/28/2013. Interesting, okay. So this is the price in April of 2013, which again is when I recall Bitcoin hit 263, which were then its all-time highs. This is the price of Litecoin around that time was 437 US dollars. It's hard to find, as I said, like graphical information that I can show you to sort of easily visually support this. What I recall is that Litecoin had gone up to about $6 a coin when Bitcoin hit 263. So those were all-time highs for Litecoin back then as well. And I thought that was super interesting that they were moving together, that they were both hitting all-time highs at the same time. And I noticed that by October-ish, September-ish, when I started buying Bitcoin, because Silk Road had been shut down and the price had dropped, and I saw this opportunity to buy, I noticed that Litecoin had dropped in terms of percentage more significantly, much more significantly than Bitcoin had. I was buying Bitcoin at around $90 a coin, but I saw that Litecoin, I remember buying it at $1.76. So, and that's the thing too, like if you start trading more regularly, you often do remember those prices very specifically, especially if it ends up being a trade that makes you a lot of money. A lot of times you will remember that. And if it's a trade that you lose a lot of money in too, it tends to get like burned into your brain, those specific prices. Let's see what this graph says. Looks like it says, excuse me. So it does say, okay, October 13th, 215. So that's not so far off the $1.76 that I recall. But yeah, it's not reporting. And I know it was $1.76 on the platforms I was trading it at that time. So I was buying it there. And my theory, again, was that if Bitcoin were to revisit its all-time highs, which seemed like there could be a distinct possibility that that would happen, my theory was that Litecoin would also revisit its previous all-time highs of roughly $6 at the same time. And that would be a better trade, a more profitable trade, because the percentage increase that I would get going from $1.76 to $6 was better than going from $90 to $263. I'm not enough of a math mind at all to quickly rattle off what those percentages would be, but the Litecoin trade would be the better trade. And what ended up happening was that, okay, if we look at December of 2013, Litecoin went like gangbusters crazy. I remember it went up to $42 a coin in December of 2013. So like, it was like 6-ish weeks later, if that. This is showing the price at 31.39. But yeah, it went up higher. And there was a scam, and I caught it, and I felt smart because I didn't see anybody else on Reddit discussing this. But I was buying my Litecoin through a platform called EOBot. That's the thing. There are all these like jankier platforms. Like we still see a lot of scams in cryptocurrency today, obviously, but the scams have evolved over time. So at that time, there was this platform, and it said that you could use it to buy Litecoin with PayPal. And so I used it, and I noticed that in the quote unquote merchant notes, there was something weird, and I contacted PayPal about it, and they said that it was something about refunding your money if you wanted to get it refunded. Essentially, the person running EOBot, I think it was like one guy in Poland, actually, he was presenting things as though like PayPal had some policy that was actually a thing that he was just saying. So what he did was that's the thing about having custody as well. I didn't actually have custody of my Litecoin when I was purchasing it through this platform. It was just like a number that was showing up when I logged into his site, to Eobot's site. So whenever it went up like crazy to like $42 by December of 2013, he sent this message that said like, oh, PayPal is reversing your transaction. Here's your whatever amount of money back. So he did that because he wanted to keep my Litecoin, the Litecoin of all of the users on his platform, and he was lying to make it look like PayPal had some policy requiring that happen. And it took, okay, that was 2013. It wasn't until, I think it was late 2018, early 2019, over 5 years later, that I had like all kinds of challenges in the meantime that I won't go into here. Financial challenges, just trying to keep seeds going and to get it out there because there's so little money for female founders in tech. That's like the main reason. And so like five plus years later, I was able to find a lawyer who would like help pro bono. And we contacted the guy. That's how I know that it looked like it was like one Polish guy living in Poland. And we're just like, hey, we know that PayPal didn't say this, that you lied. Like, give me my Litecoin. And by then it had gone up to, I think, over $300 or something. I mean, we're looking at the graph right here. On all-time highs here, this is 269. I remember it getting up above 3. And this is in May of 2021. So that's around the peak of the last cryptocurrency market cycle. It was, okay, this is 387. Yeah, that's closer to what I remember. And I was buying it at $1.76, right? So we did win. We managed to get this guy to give me the Litecoin that he took from me. If I was more on top of things then, in the way that I hope that I am now, I would have also asked for like interest and disgorgement because he could have made a bunch of profits off of it in the fucking like the 5 years that he held my money. But I did get that back. And it was a huge boon because I needed it to like be able to move into an apartment and stuff. Like it transformed my life, and that I was able to get that back. And I had this chunk of cash that then made me look like I could fit into this stupid system and like look like an attractive renter or whatever. So I just went through a similar thing with Gemini. As I was speaking, I was realizing like, oh yeah, it was 5 years with Eobot, and it's been 5 years since Gemini ripped me off. And I'll keep pursuing it. I just got a huge blow because they forced me to use this arbitration firm that was really shady and seemed to be deferring to them throughout the process. So now I have to actually sue them in court, even though they've done everything they can to try and prevent that. So we'll see what happens. But the moral of that story is that you want to keep your cryptocurrency off of centralized platforms that have custody of it. It was a different environment in 2013. So, I mean, I don't want to be too hard on myself for that then, and it ended up working out anyway because it benefited me to get that money later. But we want to make sure not to do that as much as possible. We are still forced to use them in most cases in order to buy cryptocurrency with our local currency. But as soon as you get that cryptocurrency, as soon as you've made that purchase, it's not like a bank. It's not, I mean, there's more regulation happening now, which is good in a lot of ways, as long as it's thoughtful regulation. But it's not like a bank in the sense that, you log into whatever your bank dashboard and you can reasonably trust that that bank probably isn't going to steal the money that is showing up as yours in numbers on a screen. Whenever your cryptocurrency is in the custody of a centralized exchange, like failures in centralized exchanges were largely what caused prices to drop in cryptocurrency as a whole 2-ish years ago, 2.5 years ago. And we don't want to be stuck fighting these horrible organizations. It's just good policy to make your trade, get your cryptocurrency off of that centralized platform and into a self-custody wallet that you control, that you have the keys for or the mnemonic for. And then you can avoid a lot of heartache. And additionally, it just kind of seems to me like these centralized exchanges are kind of going away. I mean, there hasn't been one since Coinbase had this recent breach that isn't messing up in ways that damage their users. And Coinbase had treated its users poorly for many years before that. So Yeah, that's the big moral of that story. Three other trades I wanted to talk about. I'm already going longer than I expected though, and I don't want to keep you too long, but Ether was the next significant one. So Ether came on the scene in, I believe it was July of 2015. This is so hard to find. It's weird that you can't find good historical data. Like seriously, if you try, I mean, I just want to see a graph, not like, why would I want to see, how is this significant to me? That this is like a top search result. Let's see. I apologize. I had this pulled up before and then my machine had to be shut down. We can look at this, but this data isn't like super robust. Ether came on the scene in July of 2015, I believe, in that they did what was the first ICO, initial coin offering. The most visible co-founder of Ethereum, although there are like 8 co-founders, I believe, Vitalik Buterin was a Bitcoin a developer who worked with Bitcoin. He wrote for Bitcoin Magazine, I believe. He was really interested in the technology. His thing was like, this is great, but what if we designed a new crypto network that made it easy for software engineers to build projects on top of the network? And Bitcoin wasn't designed to do that. So that's what Ethereum was presenting. So in July of 2015, they did this ICO where they raised, I think it was like $15 million in Bitcoin to fund their project. So people just funded it with Bitcoin, which meant that they were getting Ether at low prices early on. And there were a lot of ICOs later, but we'll talk a little bit more about that. Then the project itself, I'm sorry, I think that was July of 2014, and then they launched in July of 2015. Am I wrong? Let's see. Look at this. See, this price only goes back to 2017. That's so annoying. May of 2017 is not the max price. Let's look real quick. When was Ether ICO? Yeah, my bad. It was 2014, and then it launched in 2015. Then in 2016, I think also around July, about a year later, they had problems with hackers. They had to do what was called a hard fork to address some issues with security. That caused a lot of uncertainty. I can't even show you how that affected the price because this alleged max graph doesn't go back that far, which is stupid. So yeah, it rocked the sector a bit in 2016. I didn't start buying Ether until early 2017. I believe it was February of 2017. And then through that year, we started to see things going gangbusters again, largely because you could build projects on top of Ethereum relatively easily. Seeds is built on top of Ethereum, in fact, our project. Because you could do that, there were a lot of projects that just did that, even though they didn't have necessarily like an understanding of why that would even make sense in terms of the design of their ecosystems. It was, a lot of people saw it as a cash grab, and there were a lot of scammy projects that are not around anymore that appeared then, and there was a ton of hype and it drove up the price and so forth. So that Ether trade was exciting to me. It was fun to see things going that way in 2017. That was also on a personal level. It was maybe the hardest, I don't know if there have been so many difficult times in different ways. That was probably the most difficult financial year I ever had while working on seeds. And having this Ether trade helped. It helped a lot because I needed money and there wasn't money available. I should share, I didn't touch on this when I was talking about the Bitcoin trade earlier though, but while I was grateful that I had managed to make these cryptocurrency trades that brought in some great profits relatively quickly, sometimes super quickly. I mean, with the Bitcoin trade and with the Litecoin trade, that was huge profits in a matter of weeks, actually. But I had to sell those cryptocurrencies to pay bills because the legacy, it's not funny at all, but the legacy economic system, venture capital especially, I talk about this a lot and I'm going to talk about it until that sector dies. I want seeds to render that sector obsolete. But over 98% of money in the VC sector, investment that fuels all of the tech that we use, goes to men, goes to male-founded organizations. If you're not a dude, it's a lot harder to get money. Even though there's a lot of data out there that shows that female-founded organizations are better investments. they're more profitable. So I had to sell my cryptocurrency to keep things going. And there's a huge opportunity cost in that, of course, because if I'd been able to hold on to, the Bitcoin that I was buying at $90 a coin, I would be a rich woman today in like developed world American standards. I would be very wealthy. Of course, I live in the richest country in the world. I live inside a house. Like I'm doing okay. I'm okay. But that opportunity cost is such a huge flaw in the design of late stage capitalism. And so Seeds seeks to address that, because you can redeem a single seed to ask for whatever amount of money that you might need. And then you can receive that as a gift from givers in the Seeds community. And if that had been available to me at that time, I hadn't figured this out yet. I had to like have this painful experience to understand that Seeds needed to address this problem in this way. If I could have done that in January of 2014, that would have been amazing. I could have redeemed a seed and asked for the money to pay the bills, paid the bills with that, and then kept my Bitcoin. That would have been life-changing, hugely life-changing down the line, right? So that's part of why Seeds is designed in the way that it is, to help us get out of this trap of the design of late-stage capitalism, which keeps so many of us stuck because most of us in the old system don't have access to a ton of capital all the time. It's just flawed, as we know. It's very flawed. Another trade I wanted to talk about that was really fun, and to be clear, I've only been excited about, I don't know, like 5 or 6 developments really in the world of cryptocurrency over the years that I've been involved in it. Especially I was thinking about this recently, especially in the last few years. There's so much junk and like so little innovation that it's kind of boring now. Like I can't think of something that has been terribly interesting that has come out in the last few years. It's just like derivative stuff. And I think that's probably how the life cycle of something like that will go. I think, of course, I'm biased because Seeds is a project I founded, but I think the next widespread exciting thing in cryptocurrency that people don't know about yet, because Seeds is still little known, would be Seeds, because it's actually using the technology to do things to transcend the legacy economic system in a way that no other project in cryptocurrency or outside of it is, because it allows you to build wealth through giving, which the old system obviously does not do. Something I was really excited about launched in November of 2018, and that was Uniswap. So we can look at their platform now. I think the people behind Uniswap are kind of dicks, which is another huge bummer of a thing. I haven't come across a lot of nice people in the world of cryptocurrency, which goes without saying probably, and has also made it harder for Seeds in sharing our message, because using the word cryptocurrency is such a turnoff for a lot of people that would resonate with a mission like the mission behind Seeds. But I was super excited about what this was doing. Before Uniswap launched in November of 2018, there were various other platforms. One was called Ether Delta, I recall, that were trying to offer a decentralized solution for trading so that we didn't have to use centralized platforms like Coinbase. Coinbase was the most visible, at least in the US, around that time, I would say. So nobody could really figure it out, because the benefits, or whatever word you want to use, the function that rich people behind a centralized exchange can serve is that they can pool a lot of money. They can put up their own money if they need to, in order to make sure that there's enough of what's called liquidity on the centralized platform to facilitate trade. Because if people are coming to your platform and they want to trade Bitcoin, but there isn't much Bitcoin for sale, then they can't do what they came to do, and they're going to go somewhere else, right? So if we're talking about super evil, terrible cryptocurrency exchange, centralized cryptocurrency exchange, Gemini, I don't even want to pull up their pictures. Should I? I guess I will. Ugh. Gemini founders, billionaires. So if we're talking about Gemini, which is another popular cryptocurrency exchange in the US, which I have sent many people to over the years, I described it as the least worst centralized exchange. And now I can't even do that anymore because they screwed me over so hard. So in terms of the history of this, what's kind of interesting is that if you ever saw The Social Network, that movie from like 15 years ago now, with like Army Hammer, I don't know, like I assume like millennials remember this, also because it's about Facebook and like millennials. Yeah, but this movie, right? Okay, this movie tells the story of Army Hammer playing twins being mad at Zuckerberg for stealing their idea, right? These are the real dudes who sued Zuckerberg for stealing their idea. Ugh. And they got $65 million from Zuckerberg through that lawsuit. And they put $11 million of that money into Bitcoin in 2013. So by 2017, they were billionaires. They also founded Gemini's cryptocurrency exchange. It's called Gemini because they're twins. I think they founded that in 2014. So they had money to put up to provide liquidity for this platform. There are also Harvard grads whose dad was already worth $100 million like when they were in school. So they had other connections to like private equity and stuff, one can assume, to raise money so that there was liquidity for this centralized platform. So that was the problem that decentralized platforms couldn't solve for a long time, because they couldn't figure out a way to pool everything so that, they could bring a bunch of people with a little bit of cryptocurrency together to create enough liquidity so that trades could actually take place on a decentralized platform. Nobody could figure it out. And then in November of 2018, Uniswap launched. The founder, Hayden Adams, has a background in thermodynamics, I believe, and he's talked about how his understanding of thermodynamics influenced figuring out how to design this platform. But it's still really exciting to me. I think it's a brilliant solution, even if they are assholes. They've been so, dealing with them has been not great for us as well, for me personally and for Seeds. But what he figured out was that because so many projects were built on top of Ethereum, Ether, the cryptocurrency, could act as like a mediating token. He built Uniswap on top of Ethereum. It was another project built on top of Ethereum. And then he encouraged people to add to these pools on their decentralized platform. And the beauty of using a decentralized platform is that you can do something like adding to a liquidity pool here, which can garner you a passive income, because traders are using your liquidity to execute trades and they're paying you a fee. When you add liquidity to a pool, you're getting paid to do it. And then at the same time, what's beautiful about this design is that you retain custody of your funds. You can remove them from the platform at any time. It's programmatic. To be clear, the amount of cryptocurrency that you have in a position is constantly fluctuating as traders trade. But nobody could figure out how to do that before this launched in November of 2018. Like in the history of the banking sector, it had always been necessary for these centralized banks, which we had because we didn't know a better way to do it. We didn't know how to organize decentralized finance before we had this technology. These centralized banks always had to retain custody of our money. And we just, took that for granted. We figured like that's the way it has to work. That's the design. We were somewhat reassured, if you're in the States like I am, that the federal government guarantees our deposits up to $250,000, et cetera. But Uniswap figured out a way to get around this. And so people really started adding to these pools. And the way it worked in its earliest iteration was that you still have to do this, but you had to add cryptocurrencies in a pair. So if you wanted to, like here we can see this is the USDC Ether pair. We can see now it's telling us what the returns are. In a year, the annual percentage returns for adding to these pools. So in this pool, WBTC wrapped Bitcoin, which is, not to get too technical, but it's like a form of Bitcoin, which is Ethereum compatible and therefore can work on this platform. And USDC, which is a stable coin issued by Coinbase, which I don't recommend using, by the way. But according to this, if you're adding to that pool, you're getting a return annually of over 68.5%. That's an amazing return. And then if cryptocurrency itself is going up in value at the same time, you can see crazy returns. So I'm always encouraging people to use Uniswap, to use decentralized finance, because if you're not adding your funds to a liquidity pool, it is a lot like just like stashing your cash under the mattress. Like you already have those funds, you might as well put them to work. And when you do, you can retain custody of that at the same time. And Seeds is on Uniswap. And we started referring to it as our mutual aid pool because our project is unique and it functions as a mutual aid pool. Like we can send gifts to people, to women especially, in places like South Sudan, where they were not even issued IDs because the government, until very recently, as I understand, was not issuing women IDs. So they don't have IDs. So then they can't open up a bank account. But they do have mobile phones with internet connections. And so therefore they can use this platform and they can benefit from Seeds. So in that way, if this technology, as it is with Seeds, is actually being used toward the end of trying to help people, some amazing things can happen. But so much energy in the cryptocurrency sector has just gone to like a bunch of dudes trying to like steal from each other and trying to steal from other people, stealing from me. And it's just so deeply disappointing, you know? It's so deeply disappointing. The trade, though, I wanted to specifically talk about was that, so this was, I think, September of 2020. So Uniswap had been around for almost 2 years. We've been using it. There'd been a Seeds pool on Uniswap. And they did what's called an airdrop, where they give you free money. But they did it in this clever way. Prior to this, a lot of airdrops, you know, like you just look at your wallet and you'd be like, oh, whoa, somebody just sent me a bunch of cryptocurrency. That's great. And then you would sell it. And so it wasn't actually a good distribution mechanism for the projects themselves who are doing these airdrops, because that's not going to help your project grow if you're giving this cryptocurrency away and people are just dumping it. It's going to drive the price down, right? Uniswap did something clever, but I also suspect that it had to have been manipulated by like fancy VC in the cryptocurrency sector. When they did this airdrop in September of 2020, the way they did it was like you had to visit their platform, you had to connect your wallet, and then if you would ever use their platform at all in the prior almost 2 years, even if the transaction you tried to enact had failed, they would give you at least 400 uni, the cryptocurrency that they were just introducing at that time. As I said, what you almost always saw with airdrops is that once they happened, the price of that cryptocurrency would go down because people were just dumping it. But uni went up. It went up a real lot. And beyond the 400 uni that you could get simply if you'd ever tried to interact with their platform, if you had added more significant amounts of cryptocurrency to different pools, you would get larger amounts of uni. And I remember, I've said this before, but I should stress it, like I was kicking myself because at that time, I had added a lot of cryptocurrency, almost all the cryptocurrency, not almost, that's not true. From the vast majority of wallets that I used, I had added the cryptocurrency that they were holding to liquidity pools on Uniswap. But for no reason, I had one wallet that had a lot of cryptocurrency in it that I just never added. I never added that cryptocurrency to a liquidity pool. If I had done that, if I had simply taken, it takes like 2 minutes to do or something, if you know how to do it, you can do it very quickly. If I had done that, if I had taken that simple action, I would have gotten enough additional money in this airdrop, this uni airdrop, to buy like a nice suburban house in the US from that alone. So don't be like me. If you have cryptocurrency that you're holding, that doesn't mean that we're going to see an event like that again. Airdrops are less common now. And that one was unique for the reasons I've mentioned. And just generally, it was unique. It was especially unique in that the price kept going up. And when I mentioned that it seemed like maybe something was being manipulated, Uniswap, its investors also are investors in Coinbase. I think that Uni was trading on Coinbase almost immediately, so you knew that there was some kind of deal that they had made, but something was driving that price up, despite the fact that a lot of people were selling Uni pretty quickly. So it was interesting. Uni got up to, I think, $40 or something like that. So that was a lot of money, and that was an exciting trade, and it was also clever design for an airdrop. It was rewarding people who use the platform. and they did so without, any idea that this type of airdrop would eventually happen. And they were rewarded. Since then, there have been similar airdrop designs. So Uni's like $6 right now. If we look at all time, yeah, I got up to like $40. This was also around the highs, around the time of like the peak of the last cryptocurrency market cycle, April-ish 2021. It was 4104 according to this. So that was a fun trade, and it was exciting. So a lot of people in the seeds community benefited from that because they'd added to the seeds mutual aid pool, and it was dope. And I don't know if we'll see something like that again, but yeah, I had listed here like mentioning other airdrops. Sometimes you can find something sort of similar now, like there are now what are called L2s, layer 2 cryptocurrencies built on top of Ethereum. Base is one, for example. So you can kind of sniff things out. Like you can infer if there's a project with some sort of platform and they haven't issued their own cryptocurrency yet, they're probably going to do that at some point. So you can, make a logical conclusion that if you're using their platform, there may be this future reward if you do so. I've gotten a couple other airdrops for that reason because I used a platform. Optimism was one. That was a few years ago now. I think I got like $7,000 from that simply because I'd used Optimism's platform. So you can keep an eye out for those. But Uniswap's airdrop and the way that was introduced was really smart. It definitely had support from rich venture capital types and from Coinbase. That's a reason that I think it's problematic that those VC are behind a platform like Uniswap. I think it's actually a gift in a lot of ways at this point that Seeds has had so much trouble raising money from VC, because I think we're meant to be free of them. We're meant to transcend them. The reason it can be problematic is because they want to get returns for their LPs. Like they're not committed to the ethos of decentralization. They're not committed to transcending the legacy economic system, because the VC that are good at their jobs, and they're not very many, they have benefited extremely from the design of the legacy economic system. So it's problematic, I think, when you see a project like Uniswap, which actually is innovative, getting investment from like Andreessen Horowitz or whatever. But there you have it. The last trade I want to talk about is Seeds. So Seeds is unique in that, unlike any other project out there, to my knowledge, of any kind, cryptocurrency or otherwise, Seeds makes it possible for you to build wealth because you help people in need. So you can help someone on the Seeds site get seeds and thanks in equal or greater value to your gift. If you do recurring gifts, for example, you can get a bonus that's even larger than 100% of the value of your gift. And then if and when seeds go up in market value, you can build wealth because you help somebody. And the philosophy there is that, doesn't that make for a better economic system if instead of rewarding people who are taking, people who have built wealth on the backs of workers who, are kind of treated like plebes? That type of economic design, this top-down sort of thing, dominated by the Jeff Bezoses and the Elon Musk of the world, it seems like that's about to die. Everything that I'm seeing, everything that I've been paying attention to spiritually, seems to point to that transition. And Seeds is about carrying us through that transition into a more idealistic world beyond, in which you don't have to trade your time for money working a job you don't like, because you can use Seeds to ask for help and receive it instead. And Seeds is designed to build a bigger pie for all who are involved, who are contributing to the ecosystem. You can also add seeds that you receive because you help somebody to the Seeds mutual aid pool on Uniswap and receive a passive income for doing so. And if you're adding additional ether to the pool, so it doesn't help the Seeds project if you're trading seeds to get ether, because that means you're taking ether out of the pool that was there anyway. It's just like moving the same ether around. But if you're adding additional ether to the Seeds ether pool to help it grow, then there are other bonuses that we've offered over the years too, and they've been super generous. And that's by design because we want to reward giving people so that they're the ones who really benefit in the future when, I mean, I wouldn't be doing this if I didn't feel absolutely certain that in the future seeds will really scale and really reach a lot of people. And by its design, when that happens, the price on the market is likely to go up. So we'll see. No guarantees, blah, whatever, disclaimers, like past performance doesn't guarantee future results, etc. But the reason I'm doing all of this is because that's what's most exciting to me. I want us to get out of this old system, which does not serve us, which is about what? It's about going to school for a bunch of years so that if you do well, you can get hired by a corporation to fit into their structure to serve their for-profit ideals instead of being able to tune into uniquely what you are here to offer as a human being, because we're all here to offer something. And it probably isn't, being a wage slave in a 9-to-5 job, even if that job is at a super fancy corporation and that job has a lot of status associated with it. I don't think that's why most of us are here. That doesn't mean that all of us are artists or all of us are entrepreneurs or anything at all. But jobs are probably going away. A lot of jobs that humans do now, they're probably not going to be doing in, 15 years, if not less. And so we need to redesign the economic system through a project like Seeds, which is meant to be a kinder economic system, which allows people to give and to build wealth because they were kind, instead of getting depleted because they were kind in the way that the old economic system, is set up to do. Depleted monetarily, at least. Of course, you get like tax deductions and whatever if you make donations to charities, but it's just a very different thing. And we've outgrown it, and it really weighs on me. I feel a lot of anger and grief about the way that system's designed. And so that's why I'm doing what I'm doing through Seeds. And I hope that we can connect with more like-minded people who feel that too, but maybe just haven't known that there was a project out there that's been working for years, as Seeds has, that is trying to get us out of this, that is trying to help us transcend dysfunction in the old way. That doesn't mean that Seeds is perfect, but I think it addresses several of the core problems baked into the old system. But until we shift into this greater, higher vibratory world in which a project like Seeds is really scaling rapidly, what we have done is I have offered this course where I teach you how to trade cryptocurrency generally. Seeds is mentioned in the course, but it's called How to Build Abundance in Cryptocurrency, and I share what I've learned through these trades through the years. I bring in, what I learned as a professional Wall Street trader, and I want to impart that knowledge to good giving people so that you know how to use these tools as they exist at current, but you're also aware of, where things may be heading in the future. And you're also engaging with Seeds because the course is effectively free when you sign up and pay in full upfront, because you get Seeds with your sign up, with your tuition. I think it's a very generous deal. I don't know anyone else out there that can offer what I can offer in terms of experience and insight and practical tips regarding trading cryptocurrency. And as I said at the beginning, the deadline to join is 2 days away. I committed to teaching this live once per year in 2021. I've taught a version of it since 2019. This is the 2025 live version of the course. So if that resonates with you, if you'd like to join, the link is in the description. Check it out. If you have more questions, let us know. You can ask in the Discord. You can email us. I'm going to be doing a couple more lives to talk about this before the deadline. But this sustains Seeds. The course sustains Seeds so that we can ensure that 100% of the value of gifts coming through our ecosystem go to people in need until we reach that tipping point at which there is enough, really society and humanity have shifted enough to support a project like Seeds and really help it to grow. So yeah, that's all I have to say. I think there are monthly payment options. If you can't afford it, you can always redeem a seed to ask for help to get the funds to join the course. That's an option too. Yeah, it's all here. So I'll leave you with that. It's been almost an hour. Let me see if there are any questions or anything. John Dillon, hi. I was just thinking about you, John. It's nice to see you. Paul says, please share a link for this BTC chart. Sure, Paul. Yeah, thanks for asking. I should have just shared that initially. I'm putting this in the chat. I can also put this in the description for folks that are watching later. Yeah, here's the link to that historical BTC Bitcoin chart that I was talking through a bit. Paul says, yes, Seeds is the best project I discovered in a very long time. Thanks, Paul. That's nice. Thank you. Paul says, yeah, go Seeds. You're amazing, Rachel. Thanks for giving us seeds and hope. Thank you, Paul. Thanks. That means a lot to hear that. It makes you feel more hopeful because I'm going to tear up. Thank you. That's so nice because it has felt, I know that I personally have felt less hope in recent years. I just saw yesterday, apparently astrologically, that is a thing that's made sense. And I guess that's meant to clear soon. So we can that's interesting, I think, to be aware of. But yeah, this is a hopeful project. I hope that it can offer that to others. It makes me feel more hopeful myself. We just need to share it. We just need more like-minded people to connect with Seeds. That's why I started focusing on YouTube a little over a year ago. And I think YouTube will be a good channel for sharing about this ultimately, but it's going to take a little bit longer. It'll probably take maybe another year or something before I'm able to reach more people through this channel, like in a more meaningful way, because YouTube makes your growth pretty slow at the beginning for most people. Anyway, so there's all of that. It looks like that's all folks had to ask. Thank you so much for your time and attention. I'll let you go. And if the course resonates, I really hope to see you in it. 2 days to go, Thursday, May 22nd, which is Bitcoin Pizza Day, which is a fun story that I've shared before. I have a video about it if you feel like watching it. All right, I'll let y'all go. Thank you so much again. Bye. Yeah. Let's add that. Oh, there's this too.